Alright guys, we're looking at the, today is Wednesday the 16th. This was Tuesday's price action, so just yesterday. So here we have a shift in the market. As you can see, that swing low was taken out by that sell side imbalance, buy side inefficiency, so that's an entry. So I entered there, not at the best price, but I have a sell limit. That sell limit that you see there, I put too high. I put at the top of the fair value gap, but I should have put it at the bottom of the fair value gap. And I put the sell limit at the top of the fair value gap because I was trying to get the best price, but in doing that, I actually missed out on getting tripped in on the second contract. So it runs, it makes the move without me. And then here, I'm just going for like a easy target, not too far away, but my trade idea here is that there's some relative equal lows. I'm gonna draw it out here. So yeah, there's some liquidity and inefficiency lined up there. So for me, that's a pretty strong draw on liquidity. So make it even easier. Prices, I believe price is gonna hit the top of that inefficiency there. To go for those relative equal lows where sell stops are resting. So as you can see, how price, if you look up around my sell limit, that sell side imbalance, buy side inefficiency, you'll see that price gave me multiple opportunities to get in, but I was demanding too high of a price, so I failed to get tripped in on my sell limit, regretfully so. This one was pretty nice for me. This was like a bread and butter easy trade. I think I just cancel out that order. I should just cancel it out, but here I put it to where my regular order is already residing, because I don't want to put my sell limit super low, because then it'll change the average price of my contracts to even, like, it'll drop it. So I won't. Once price has gone away, you can either just cancel out the sell limit, or make sure you put it where your order is already resting at. Because if let's say I got in another contract down here, now the average price of my two contracts is worse than where I got it at. But yeah, that for me is a pretty bread and butter trade. Pre-market is real nice and easy. In the actual market, this would have been much more. There would have been much more profit on the line. Like all these handles that it's booking, there would have been much more to gain in the actual market. So after 9:30, but pre-market, it's chill. It's been pretty chill, even with everything going on. But still, the New York session has been really wild and violent. So still not super excited to be participating in that, but hopefully it clears up around the time that I get back home from Australia. So here, since I'm only in one contract, I'm gonna close out the contract once it hits the 75 mark, because when I'm trading with multiple contracts, see there, I canceled the order. So because when I'm trading with multiple contracts, that's where I'll take a partial, is at the 75 mark. But it's just good to like build that habit. Even though my target is there, you still got to practice using or taking partials when you're supposed to take partials. Because if you never take partials, I just reduced the risk on the trade. At this point, like price has to draw to some inefficiency or some liquidity. So and then pre-market has been super volatile. Like how, like if you look at the 930, it's really wild, like just going up and down super violently, like huge handles or huge candles, I mean. So here I'm getting ready to, once it hits the 70-mile mark, which on it says 25, but going from 1 to 25, that's 75%. And here it's a good example of how precise the price engine is, because that inefficiency, it's a 15-minute inefficiency embodying liquidity, so it's gonna pull price into it. And on top of that, you'll see how it reacts once it hits the top of that inefficiency. So I'm just getting ready to exit once it hits the 75 mark. This is already a pretty substantial run here. This one was pretty clear as day for me. And watching the 2022 mentorship has really like cleared or simplified looking for trade ideas. Before I was kind of just, I had a good idea, but this kind of gives me more solid criteria. So there I get a little bit better exit than 75%, maybe like 78, 70, 79%. Yeah, but here's a pretty good example of how precise I'm gonna be later on. Like, just seeing this, just reinforcing, the ideas that I have. Even though, yeah, I exited there, I didn't hit my target, but like I said, we're not in the business of being right. We're in the business of making money here. But even so, I'm showing the exit there, just right below 75. And that was my original target, is resting right above the inefficiency, sorry. And it's not just because the inefficiency is there, it's because there's liquidity resting there as well. And then you see that's pretty algorithmic to me. Like, it just taps it and then kind of just goes away for a little bit. It does end up taking that liquidity that's resting in that inefficiency, but before it does that, it needs to give smart money a chance to get better pricing. So it's gonna, after this, it reacts and it goes up maybe 10, maybe 20 handles, and then it plummets through the sell side liquidity pretty fast. But yeah, that was the trade there. I don't know why I showed the P&L, it doesn't really matter, but on that trade it was maybe like $1,000 trade in the pre-market, which is it's a lot in the pre-market. And then yeah, as you can see how, like, that's pretty precise. I mean, you can't dispute that. You can't dispute the precision and timing there. It's pulling up before the macro. But yeah, just wanted to share that. Pretty cool, pretty neat little trade there. And yeah, I'm gonna start keeping the videos more short. But yeah, that's all I really have for now. More trades coming for sure. I'll be engaging the market tonight. See what I can cook up. But yeah, hope you guys enjoyed. Peace.